Good morning, the COT data video for the 18th of December 2023. We're just going to look at the net non-coms. We could look at the hedge funds and the commercials, but we'll just keep it simple. We'll just look at the non-coms, which are the banks and institutions, like the big fish and the market makers. So what we're seeing them reduce their euro exposure, but we've got to remember that we are still quite strong. There's the zero line, so we are positive territory. We're sort of bucking a little bit. And we've probably got a little bit of resistance up here as well, if you think about it. And we would have technical resistance anyway on our charts on the Euro USD on that spot FX. So we'd have some resistance on the technicals, and we've got a little bit of resistance up here potentially. Above that, they've been pretty decent for a long maybe. But we're looking like we're bucking the trend slightly. Dollar declined slightly. 19,000 to 17,000, and we went from 152,000 to 147,000. So they're both in decline. However, the yen shot up, but we've got to remember with the yen we are negative, but we're less negative. So we have actually surged quite a bit, and we had these supports. If you remember, I was saying last few weeks, we did breach that, and it got like quite scary. And then we had that rhetoric come out from the Bank of Japan. And we've got the interest rate decision tonight, early, or tomorrow, depending on where you are in the world. 81,000 to 109,000 to 81. So it's a big increase there. So still below zero though, got to remember. So, you've got to be careful about buying yen, because we're still well below the zero line, but we're getting up to the zero line. But you see, every time we've tried to overcome it, it gets knocked down because of the monetary policy for the Bank of Japan, I assume. And euro off, Aussie on. It's been very erratic. Shot up, so 77, 57, minus 57, so I say 52. So we're shooting up, but we are below the zero line. Okay, so it's been very zigzaggy, Aussie. Pound on. Oh right, okay. So pound USD would be a buy. Looking at the crossover, but we can see how we actually fell quite a bit. We have to remember this is from Tuesday. Okay, so obviously this is a little bit laggy. And if you look at this in a vacuum without any other analysis, then it would be a buy. But I'd be really careful about this, because the euro pound is made buy signals all week, and that's a very good proxy for pound strength. And it was a screaming buy all week. I think after Tuesday, Wednesday, the euro pound was doing quite well. So you've got to be really careful. But they've actually really bought the pound, so it is what it is. The dollars has been quite stationary, and they've really surged on the pound, so be careful with the pound. I think this week I wouldn't look to go long personally. I'd be looking to sell it but that's just me, because I'm looking at my technical charts, and this is obviously from Tuesday, and there has been some stuff that's developed since. And we had Fed Williams speech, and he was saying how the markets got a little bit carried away, and we still got some time before the next Fed meeting, and so we've got to be careful. But I wouldn't be necessarily looking for a long on this, just because I'm looking at my H4 daily charts, and it doesn't look that good for a long. So you could look for pound strength across other currencies, like maybe the Aussie or the New Zealand dollar. I wouldn't buy it against the euro, because that's quite strong. The euro pound's quite strong, so maybe the pound yen, but you wouldn't really want to do pound yen, because the yen is pumping and the pound is pumping, so that would be a bad combination. So we'll have a look at this perhaps over the course of the week. And also, I'm not going to open up any trades this week anyway, so I'm taking it easy. Canadian dollar, so we sort of went up a little bit, minus 70, minus 57 to minus 55. Okay, so gradually going up, but it's probably going to get knocked down around about here potentially. Again, we tried to go above the zero line, but it was like, nope, you're not going up. And this was very likely oil related, and you see how the oil prices really fell probably around about that time, to be fair, and it had like really come down, didn't it? So that's probably a fundamental link, I think. Gold on, yeah, so we're now back below those highs, so that's kind of like telling us resistance. 193, 195, 195, or 188. Okay, so we've got like triple resistance there. You can see the three like spikes. So maybe a bit careful of gold potentially. The big boys are they didn't really buy the gold so much, and so much they sold it so much. We're back below the resistance. So these are obviously notable areas where it couldn't overcome that price 3 times, and now we're on the 4th time now. We tried to go above, but it's like nope. So gold's going to be really interesting. I've got a feeling that this could be a top on gold, and so you want to be careful, I think, and also keep an eye on the retail sentiment as well. So that's really interesting. Gold off and New Zealand dollar on. It's likely going to be sideways. It has been for ages. So that's that. And then we'll take the Kiwi off and Swiss franc on. And it's just pretty much tracking the New Zealand dollar, pretty much just going sideways. So be careful with the pound. They have bought it, but I'd still be really careful anyway. And the yen is surged quite a bit, and the dollar did tick down slightly, but it wasn't really a notable move. The euro ticked down, and gold's got resistance. So it's interesting that dollar's not really done much. It's just like waiting. And it's like being like a bit of like a snake. Can you see what I mean? It's just waiting, and it might spring into action, but definitely not negative either. So 17,000 contracts long still, despite all of that stuff that's going around on the dollar. They're still positive. You'd think if they were going to cut anytime soon, say March, this wouldn't be that positive. This would be coming down. So perhaps the big fish don't think we're going to get a cut in the first quarter, or maybe even the first half of next year. So be really careful. Hopefully it was useful, and don't forget this file is free for Patreon subscribers, Bulletin tier and above. So it's a really great document, and you can do anything you want with it, and you can have a look at all different permutations, different date ranges. You can look at the hedge funds and the commercials, and you've got some nice charts here as well, which could be useful. And then I'll speak to you guys soon.